Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday, as widely expected, the RBA kept interest rates at 1.5%. This being now the 20th consecutive meeting that they've held rates at the historic low of 1.5%. The RBA pretty much at this stage gave little away in the statement, except for the Governor Phil Lowe did say that he believed he maintained both the domestic and the global economies were gaining strength. The recent data on the Australian economy has been consistent with the bank's central forecast for GDP growth to pick up to average a bit above 3% in 2018 and 2019, Mr. Lowe went on to say. So far, the market appears to be still, from a technical point, still bullish since the break above 76.20, although the dip overnight did hold above the support at 75.95. In the next 24 hours, I'd like to see how the market plays out once again and see if we can get some weakness to break the level of this support at 75.95, which in turn would see further weakness towards 75.45 and maybe even reinstating the downside to 73, 75, 85, which is where the bulls are harboured out at this moment in time, and most probably will see a strong defence if it gets down to that level. But until we break 75.95, then we could see a rise up towards 76.70 and see if the market does contract from there or even show a response in supply. The euro overnight, however, has reclaims some further gains, and as you can see, the market is now looking towards the region of 117.45.75. In light of the slightly weaker US dollar, is the fact that we could see this level challenged and reassess from there, as it is ascertained that we should see weakness returning from 75 and see a move back to the downside around the 115 region. With the dollar index posting a low of 93.73, it hasn't broken down as yet. So therefore, as long as we maintain above 93.40, then I do hold my bullish view to the US dollar and my bearish view to the euro. As some of you may not know, is that the euro is weighted against the dollar index at 57.6, and therefore should see a strong recovery in the dollar index, then this would see a further weakness coming through into the euro. It would turn out that the dollar yen case is still just holding in there to the bullish case, with the technicals all supporting a further test up. It needs to clear the two levels of 110.05, which is minor, and then on towards 110.55, the objective. Reassess from there, because it's most probably likely to see take profit from long positions from around the 108. So we could see a retreat from 110.55. Dips on the day likely to be shallow from 109.45. The pound still holding to my objective of 134.50 after briefly seeing a short dip yesterday, is now slightly firmer this morning, and I do expect to see further tests with the targets of around 134.20 to 134.50 and reassess from there. Any dips at this present stage likely to be shallow at 133.80. The gold stage is another rebound off the lows of 88, with the market now seeing this level pretty much firming up and looks towards the top side with an $11 rally, did strike 1,300 before retreating slightly. In the short term though, I still expect to see further gains, even though some of the indicators are a little bit mixed here with the stochastic, but overall you can see the MACD is bullish, and we're just cutting through the midway point on the RSI. Does indicate that we should see a retest at least to this level of 0607. On the day, support now comes in at 1,295 and the minor resistance at 1,302. I still like silver, and I still expect to see further case to the bull side as the market once again stages a firm rally overnight, and you can see here trading roughly around 16.5 is that further risk is to the upside. If we break 55, this would reveal the next target around 60 to 80. Dip still likely to be shallow towards 30. Rounding off with oil, well, the market is attempting to recover, although it's unlikely to, due to the fact that we've got the break of the flag and also the break of the uptrend, which came in around $65 a barrel. From the break, exposes a region of 62.40.80 is where I'm calling at the moment, and likely to see a cap roughly around 66.5 is where this trend now is seen. So once support should now serve resistance. Well, that rounds off for today. Thank you very much for joining me. But as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.